Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. So lots of talk about the S&P reaching that $1,500 level, which is just a target on the road to 1,700. Scott, what do you think about navigating the markets now that we've reached that level?
Well, whenever you get over a psychological level, everyone starts talking about it, and the headlines this weekend were all about S&P 1500. Can it be sustained? And I do think what's somewhat bullish is that everyone's still looking for all the negatives. Everyone's looking for reasons not to trust it. But meanwhile, technically, there's been a lot to like. I think if you are searching for negatives, you'll hear about the sequester, which means that come March 1st, all of the cuts that Washington has to make will come into effect, and that's going to drag down the economy, and all the doomsday guys will come out and start focusing on that. Count how many times you hear about it on TV. But on the flip side, you have some economists actually raising the GDP of the U.S. to 2%. So it's not like they're putting some outlandish expectation of 3-4%, just to 2%. So I do think technically we've been working out very well, and I still like all the doses of pessimism out there.
So what would be the key levels that you're watching in the S&P right now?
So if we take a look at the chart of the spiders, because I like to look at that gap, you go to the chart here, you will see, let's just fast forward to where we started this year. This was New Year's Eve. Here's your big gap up. You had a 4 or 5 days worth of digestion in order to get involved when the 8-day moving average caught up. And then you had a stair step higher. Then we took out that 1474. You know how many times we talked about the importance of that level, and we didn't push through and fail. We pushed through and extended. So now, right away, the 8-day moving average comes in around 149.07. You have a new pivot high here of 150 and a quarter. I'd like to see, some work above the 149, and I guess people will start saying if we go below 1500, look at that, it was a false breakout, blah, blah, blah. But I don't think that's the case. I think if we're lucky, we get a pullback to the 8-day, and if we do get a pullback to the 21-day, for some circumstance, I think both levels are worth a look and should be viable.
Well, earnings have been rolling out the last few weeks. Last week we had Netflix, Apple, Google. What stocks will you be focusing on this week?
Well, first about last week, Netflix, oh my goodness, what a blockbuster move. You got to take a quick look at Netflix. Shorts getting torched there. You look at the size of this gap up, and then on Friday it went through that pivot of 149.17, and now look at it. I don't think it's an area to go after it, but it's also not an area just to short. You look at Google, another nice report. This one, not as blockbuster, but it doesn't have the short interest, doesn't move like Netflix, but you had a big gap up, didn't even want to come near it, extending higher into the prior highs. This looks healthy. Apple, for instance, not healthy. Apple, you had the big top over here, methodical move lower. Here's your last gap. I would watch this pivot here of about 435 to see if there's some type of action area. We are now at that gap that we talked about a few times last year, and I can't believe we even got here. So, we'll see if there's a viable pattern within here. And then I think your question is, what earnings are we looking at this week? We have Facebook coming out on Wednesday, so I think a lot of traders are going to focus on some of those, social networking names. And if you look at Facebook's had a really nice run. We were trying to be, involved with this one throughout the course of it. Right now, I have no position in Facebook. You had that really nice move above 24.75, then the consolidation right around the 28.29. Here was that event that was sold, and now we're hovering right in here. So you just have to ask yourself a question: if you're a long-term now bull on Facebook, if you're going to hold through earnings, or if you're going to wait. I'm probably just going to wait till after the print. If we get a move above 32.21, we could have another nice move to the upside. And I think that the expectations we had of 32 to 34 already got met. So there is a chance that, why can't this thing fill this gap up to about 38 at some time this year? And
then looking a little bit further out on the horizon, next week, LinkedIn reports earnings. This is a stock that doesn't get as much attention, but still looks like it has a nice macro pattern.
Yeah, I like this one. This one's been already public for a lot longer than Facebook. They've had some reports. Institutional interest is getting a little bit more confident. So if you look here real quickly on LinkedIn, which I do have a position of, you go into your weekly chart and you will see that, it's right near highs. It's been under accumulation. It has some trust there. And, this next level here, 125, I think it could blow through. And my expectations that I put out there in the media, I think for this LinkedIn is anywhere between 140 to 150, and it's well on its way. I like this pattern here.
Well, we're going to be talking about all of this and more in the long version, so stay with us.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, We teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.